Good afternoon, ladies and gentlemen, and welcome to the Technoplast Q1 FY23 earnings conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram Suryavanshi, Vice President, PhillipCapital. Thank you, and over to you, sir.
Thank you, Michelle. Good evening and very warm welcome to everyone. Thank you for being on the call of Technoplast Limited. We are happy to have the management with us here today for question and answer session with the investment community. Management is represented by Mr. Sanjay Kulkarni, Chairman and Independent Director, Mr. Bharat Vagaria, Managing Director, Mr. Raghupati Tyagarajan, Full-Time Director, Mr. Sandeep Modi, Senior Vice President, Accounts and Corporate Planning, and Mr. Hemant Soni, Head, Legal and Corporate Affairs. Before we start with the question and answer session, we'll have opening comments from the management. Now I hand over the call to Mr. Bharat Vagaria for their opening comments. Over to you, sir.
Thank you, Vikram, and good afternoon to all of you. I have with me Mr. Raghupati Tyagarajan, Full-Time Director, Mr. Sandeep Modi, Senior Vice President, Accounts and Corporate Planning, Mr. Hemant Soni, Vice President, Legal and Corporate Affairs. Due to heavy rains, our Chairman and Independent Director, Mr. Sanjay Kulkarni, could not come physically, and he is attending in the call. We are here to essentially talk about our results for Q1 FY 2023 and outlook for the rest of the years. We are pleased to inform that company has started fiscal 2023 on an encouraging note with a healthy performance driven by good demand in industrial packaging, robust growth in composite cylinder business. Q1 revenue and PAT are up by 25% and 56% on year-on-year, led by high utilization of capacities. This is despite of global uncertainties and continued inflationary pressure in the key raw materials. The company continued to receive overwhelming response for its Type 4 composite cylinder for CNG casket. In addition, during the quarter, NED Energy Limited, a subsidiary of Technoplast Limited, had signed a memorandum of understanding with Tesla Power USA Inc. for an order of value of 100 crores to supply VRL batteries of the different sizes for application across the power, solar and UPC, etc. With the strong outlook on Indian pharmaceuticals and chemical business, driven by migration of chemical companies out of China, coupled with the good demand for CNG casket, we expect to continue our growth momentum for rest of the year. The results are already announced, but I will just walk through some of the key financials and operation highlights. During the Q1 FY23 compared to Q1 FY23 on a consolidated basis, net sales stood 945 crores as against 755 crores. EBITDA 124 crores as against 101 crores. But PAT is increasing substantial percentage more, that is 44 crores as against 29 crores. Cash profit 86 crores as against 68 crores. In terms of the percentage compared to previous year, sale is increased by 25%, which is in India 27%, overseas 23%. Volume increase 13%, India 14%, overseas 12%. EBITDA is increased by 23% and PAT is increased by 56%. EBITDA margin, yes, compared to whole year estimate is down, means we can say EBITDA margin is at 13.1% as against 13.4%. But as we all are aware, in the first Q1 of this FY23, little inflationary in the raw material prices were there, which we have also passed on to the customer, but there is a gap of around 25 to 30 days affected little margin. The share of the business, established product versus value-added products. Value-added products grew by 36% in Q1 FY23 as compared to Q1 FY22. While established product grew by 23%, the share of the value-added product has been 22% of the total sales in Q1 FY23 as against 20%. It means it is clearly visible the sale of the value-added products are increasing in terms of the percentage. The share of the India and overseas business is 63% and 33%, almost the same as for the previous year, not much change. EBITDA margin in India and overseas also in the range of around 13.3 and 12.9% respectively. Debt, small reduction is there compared to March ending, maybe around 26 crores. Capex plan, as we said the last time also, the annual capex expenditure for normal and this automation, re-engineering and value-added product expansion in normal way it is 170 to 180 crores. But especially we are watching and as looking to the demand of CNG, we will have a more capex. But time to time we are doing to capture the business in hand. And in the first quarter, capex included is 49 crores, which includes mainly for value-added products 34 crores and maintenance capex is 15 crores. Now consolidation restructuring in overseas businesses is already we have updated, provided in our results also. That consolidation of overseas business by way of a restructuring through the consolidation through the JV. By this investment, the majority stack is still under process as at 30th June also. And we will come to know outcome of this in the period ahead. But we are sure, as company is projected, in the current financial year, this entire things will be under consolidation. In addition to that, one also I would like to tell you, subsequent to consolidation of the overseas businesses, in India is also some consolidation of the business to optimize the unit productivity will be also in the agenda, and that also will begin immediately. So now I would like to open the floor to answer specific questions. Thanking you for hearing patiently.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pritesh Chheda from Lucky Investment Managers Private Limited. Please go ahead.
Sir, just a simple calculation between June 19 and June 22, June 19 being a normal quarter and June 22 being a normal quarter. There is hardly any growth in the revenue of the company, despite the fact that you have written in a presentation somewhere that chemical and pharmaceutical sectors are doing well. So just, why is it so? And this assessment, let's say for last 5-6 years, we have been in a static revenue zone. So, what is the challenge, or what is your assessment of this?
Pritesh.
Yes, sir.
Now you're talking about the comparing from June 19 to June 20, right?
June 19 to June 22. June 19 was 870 crore revenue. June 22 is 950 crore revenue. And if you take it from 17, 18, 19, 20, our business has been 3,500 crore only.
Yeah, but I think we'll have to make a comparison of EBITDA part also. You see that there is a revenue is depending on the prices of the inputs. Okay, now, as we have mentioned last time also, that now pre-COVID level business has started already, apart from last 2 years. Now business is coming to pre-COVID level and has achieved 945 crores compared to previous year also. There is a volume growth of 13%. And as we all know, chemical business has started picking up in India, and definitely this year, as we are also sure, and as the business is coming up in each of the sector, so this year we are also expecting, as last year pre-COVID level business was around 3,600, some around 3,600 crore. So definitely now we are back to the pre-COVID level, but definitely this year we will achieve the revenue around the 15% more than the previous year. So definitely it's good demand is there. Each of the segment is picking up now, and we are sure this year we will cross more than 4,000 crores.
So my second question is the LPG composite cylinder and
Yes.
the CNG composite, the CNG cylinder cascade. So this business, what was the size of this business in the year gone by, which is FY22? And what will be the size of the business this year based on whatever orders that you have got and execution which is lined up?
Now, as far as LPG is concerned, in the beginning itself, we have told that we have a good order book, has received the order from this IOCL for the supply. It is going in the first year and second year also will be continued. And almost 60-70% of our capacity is booked by IOCL. In Q1, yes, little supply was less considering the flood in many of the regions, and this is affecting their delivery part also. But as we are also committed to supply almost around 750,000 cylinders of this LPG to the IOCL, plus we are supplying to the other many countries. So LPG business, I can say the percent utilization will also be more than 90% as far as LPG is concerned. CNG concern is also, as last year was very small and Q1 last year was hardly we did the revenue of 6 crore. But current year, this Q1 also we did revenue of around 30 crore rupees. But as a composite as a whole, if you will see, the last year around 230 crore. But this year we are sure it will cross more than 350 crores. So definitely the growth in this composite cylinder will be more than 50%, even more than 50% in CNG and LPG put together.
So 230 was CNG plus LPG put together with very less number from CNG last year, and 350 is this year of CNG and LPG put together, right?
Yeah, more than that. 350 the conservative.
The volumes, if you could share in that 230 crore, what was the volume of cylinders?
In 230 crores volume of the cylinders, if you ask me the 2022 whole of the year, it is around 9 lakh cylinder was there.
And this year?
And this year we are projecting, because you know that sellable capacity we can manufacture a 10 lakh cylinder in the present capacity. So definitely we will have a more than 90% utilization. LPG, we are considering 90% capacity where we can do the revenue, maximum revenue we can do 230 crores from our existing investment. But as last time also I told that whenever the new tenders will come, because this business is committed for 2 years. Now whenever the new tender will come out from the other gas distribution company like HPCL and the BPCL, then definitely we will talk about detailed expansion plan. But currently, yes, we are utilizing existing capacity, so where we can generate the maximum revenue of 230 to 240 crores, and out of that 90% we are utilization is there. But especially I would like to tell you about the CNG part, where we had done the initially, slowly we are investing, and further in the last call I mentioned that my technical directors was out of India and we wanted to do the capex plan for the CNG cylinder, which already talk is on. We have already, expansion plan is finalized, but in any case, taking the delivery time is more, considering 8 to 10 months. So definitely part expansion will go this year, but full utilization, and I will receive the capital equipment by beginning of the next year. So we will get some benefit in Q4 of this year, but full benefit will be captured in 2023-24 when the entire capex plan will come. Yeah, order booking is concerned, we have a good order booking. Even I am telling you, pleased to tell you, today also we have order booking of around 250 crores value of the CNG orders in hand. And LPG order is also around 300 crores we have for 2 years supply. If I put both together, then 550 crores order book is there. Even CNG part, we have slowed down order booking because when I don't have a supply capacity, I don't want to increase unnecessary order book at the present because too much volatility in the prices. So we thought it's the right time. When we will have a visibility of receiving of the plant, then we will do the booking of the CNG.
Sir, what is the total volume LPG plus CNG this year?
This means you mean to say the
FY23.
2023?
Yeah.
2022-23, we are estimating both together, as I mentioned to you, 350 crores value terms.
Sir, volume.
Volume-wise, I am considering 950,000 LPG cylinder and this casket, I am considering around 225 casket.
Okay, 225 caskets. So basically 1 million LPG cylinder capacity will run at 90% capacity.
More than 90%, yes.
And how much casket capacity do we have?
In fact, casket capacity I have increased already in this quarter. I have increased.
And what number, sir?
I have increased. Whatever, it's different lines are there. Last time we had 4 lines. We have now installed 5 lines. 6 line is working. But 1 line, I can do around 5 to 6 caskets in a month. So 4 lines, I am doing around 20 caskets. So all utilization full capacity running. Now, the 5th line will start at the end of this month. So next I can say 6 months, I'll have a capacity and we'll be able to do around 25 caskets in a month.
Okay. Thank you, sir. This was it. Thank you.
Thank you. The next question is from the line of Shashi Ranjan, an individual investor. Please go ahead. Mr. Ranjan, I have unmuted your line. Please proceed with your question.
Ma'am?
Mr. Ranjan, we cannot hear you.
Hello?
As the participant has left the queue, we move on to the next question, which is from the line of Karan Gupta from CAVI Capital. Please go ahead.
Thank you very much. I appreciate the opportunity. Sir, you mentioned about year-to-year growth in revenues and EBITDA, but if I just look at the quarter-over-quarter numbers, so comparing quarter 4 of FY22 to quarter 1 of FY23, it looks like there's a slight degrowth. I understand there might be a little seasonality, but can you just talk about the numbers on a quarter-over-quarter basis, please?
No, what you want to understand about quarter 1 of the previous year or quarter 1 of this year, right?
No, comparing quarter 4 of the previous year, so to quarter 1 of this year.
Okay. No, quarter 4 of the previous year and quarter 1 of this, current year, you are right. If you see, because you know that always I just would like to expand our business trend in the last 15 or 20 years. In each of the years, you will find first quarter we do normal business of 22 or 22% of the overall revenue. Then in the second quarter, it is around 25% of the overall revenue. Third quarter, we get around 27% of the total revenue. And mostly 30% we get always in the Q4. Because in India, all companies follow the financial year and everybody has a target. Every corporate has a target, every EPC contractor has a target, government has a target. So always it is seen. So you see, never means Q4 is the highest where we do 30% business. So Q4 to, if you will see the Q1, definitely there is a down by 20% business quarterly because in the Q4 we had achieved 1,040 crores business as against we achieved 945 crores. The EBITDA level is down compared to last means Q4 to Q1 of this year is 11%. Profit is down by 21%. And net profit after everything, this minority interest down by 20%. But then this data is Q4 to Q1 not comparable. Always it is seen that Q1 to Q1 of the previous year. When we will go to the Q4, definitely you will have a growth over this Q4 of FY22 to FY23 because there is a lot of potential and good opportunity for the CNG business where the capacity already expanded now. And further, company has a plan to do expansion more CNG, LPG also full order book is there as far as current year is concerned. So I've given you the comparison of Q4 to last year Q4 to this Q1. But
right. I appreciate that, sir. I understand the seasonality in the business.
Yeah.
Okay. All right. So next question, I actually wanted you to discuss a little bit. I know you've made disclosures regarding the organization of the international businesses, but I just wanted to get an understanding of why the company is doing this at this point. Why this change in strategy where historically you've expanded significantly overseas and put up a lot of capex. So why this decision to consolidate those holdings and focus more on India at the present time?
Karan, it's a good question you asked. It's the same question we also thought and discussed deliberately in our board meeting also. You know that my overseas business, which is almost giving you the 30 to 33% revenue from overseas, but where my EBITDA margins are in the range of around 13%. But the business we are talking now, it's a right time for consolidation. Why? Because in India, there is too much opportunity available for the composite products, which we have seen in the last 2 years' time. And in fact, this 2 years' time, we thought, why not to increase the return of the investor, return the good benefit to the all valued investor, including promoters also. So thought it is to be because in value-added products, these composite products comes under the value-added products where the EBITDA margin ranging from 18% to 22%. Average we can take 20%. So what we are doing is to increase the ROC, to have a good opportunity available in India and to capture the demand which is already there and where the big investment is also required. Investment I am talking in LPG and CNG put together, that works out more than 200 crores. So company is replacing the business from 13% EBITDA level to 18% EBITDA level. In addition to that, there will be the substantial benefit in reducing the working capital cycle time also. The value-added product where the working capital cycle time is in the range of, I can say, 65 to 70 days, wherein the other products, the cycle time is more than 100 days. Mm-hmm. These are the main objectives. Means we are very clear, we would current ROC, which is in the range of 13%, in the next 3 years' time, it should reach to around 19, above 19% or maybe around 20%.
Okay. Do you have any projections of what your, capital
That normally you have seen, I can say the trend is there. Capex, normal capex is in the range of 150 to 180 crores, which includes the normal maintenance, automation, re-engineering for my existing product to maintain the capacity, changing in the mold, changing the machine. That's all are there. But the value-added product, where we would like, for example, just I am giving you the composite product, which currently we are doing in the range of around 250 crores to 260 crore business. We are targeting in the next 3 years' time, this business should reach to the 1,000 crore business. And that is possible very quickly because order booking is there, good demand is there. So we will have required to do investment of around 250 crores in composite product. But that will be done on completion of this decision. Yes, we are committed. We have already ordered the plant and equipment. Project is already finalized. And but we thought, because this equipment is also good delivery time, they take around 8 to 10 months time in delivery. So,
right. So, but if you're looking, sorry, sir, I understand where you're coming from. What I was trying to understand was, or get a better sense of was, if you're saying you're going to be spending 150 to 180 crores over the next 3 years in capex, that's about 450 to 500 crores. Now, is that going to be funded through internal accruals? How much of that is going to come through come from this reorganization where I'm assuming you'll be raising some capital by, offloading stakes in your overseas subsidiaries and plants. So can you just tell us what the source of all this funding is going to be?
So in fact, you have gone through our resolution, which is approved by the board of the directors and shareholders. This investment process, for example, received by X, okay, because still we have to, what self-realization we are going to get, that all will be decided by our advisors. We have already given the name JP Morgan and EY is our advisor for this decision process. And there, we will also be continue as a management. The majority stake will go to the strategic or financial investor, but some minority equity we will continue. Management will also continue with the same management will continue. But our objective, as I mentioned to you, that whatever consideration we will receive, that will be used for the almost around 50 to 60% will be used for the reduction of the debt. Then the expansion which I mentioned to you, around 250 crores, we are planning for expansion of the composite products. And balance definitely for the value of our investors, including the promoters, all will get some kind of the benefit by the whatever this board is approved. Maybe that is special dividend, maybe buyback of the shares by the company. That will be then decided on finalization of this complete deal. And once we have also clarified, this entire process will be completed in the current financial year only.
Right. No, I understand that those are disclosures that you've already made. The sense I was trying to get was like, just around numbers. I understand you've given the mandate to JP Morgan and.
But you know the numbers. We don't know even numbers. Some kind of the rumors people.
No, but you must have some internal going into such a large reorganization. I'm sure you must have a sense of some expectation as to the kind of capital that you might be able to raise. For example, your debt was just unsecured loans I'm looking at was about 250 crores as of March. So if you're assuming you'll pay those back, you'll be able to fund 50 to 60% of this 500 crores of capex. So along those lines, you must have had some kind of internal working that you might be able to share with us.
No, but one thing I'm telling you, as we have signed some kind of a confidential agreement with the potential of this thing, so we can't give them. But very well in indirect way. Means the current valuation of the company, what company is valued together. If you will get sometime over and over premium and whether objective to see in the period ahead, we are targeting to increase the ROC by 20%, and that is possible by expansion in the valued product. And I am also another coming on your point only. If I will wait for 3 years and I can very well justify for debt and everything, if we do not do the reinvestment, but then my expansion product will take some time. And that time I can say we can miss out that bus. But we would like to capture the growth of the CNG, where the very, very huge potential in India. But not only CNG, one thing again I am clarifying you further. We are equipment which we are talking for applications of CNG, as well as we will do the test up to the testing process for the hydrogen cylinder also, which have a very large potential. You can say after 3 years, India will have a very good market for hydrogen cylinder. So equipment which we are selecting is a combination of mainly for CNG, but some kind of the testing system, approving size, we are considering equipment for hydrogen equipment also. So for that, we are in fact, therefore we are doing the disinvestment, consolidations of operations. Further you see my remarks, in India also we are consolidating some of the product line. You have seen in the last 2 years time, we have consolidated we have put the item for held under sale, almost 50 crores value of the what we have mentioned, assets which are under sale, which have been identified. In addition to that, consolidation of the operation, because nowadays, wherever to optimize margins, capacity utilization, we'll have the consolidation process is continues on. So we have first initiative that we have taken for consolidation of the overseas business. Yes, in the period 2 years ahead, India also we will do some consolidation of the product mix.
So that is it is very encouraging, because from an analyst perspective, what we've seen in the past, obviously the company is very innovative. You have an excellent R&D team. You've come up with very innovative products, it's just manufacturing and sale of these products entails a lot of capex, and that, and the capital kind of gets blocked. So there has been no. That's why over the years, at least my understanding is that's why the return on that capital has been relatively weak. So it is very encouraging what you're saying, and we hope you're able to achieve everything that you set out for. So thank you. I really appreciate the opportunity again. But one quick just data keeping point on page 8 of your presentation, where you've given the volume growth for value-added products. The subtotal says 22.9% year-over-year volume growth. I couldn't follow that calculation. So, either now or offline, if somebody could just help me out with how that number was arrived at.
Yeah, we'll provide. I think what we can do it. The details are available with our Mr. Team. And Digvijay, you can make a call after that. You can get tomorrow morning, no problem. But I was working to understand the calculation.
I appreciate that. Thank you very much, sir, and all the best.
Thank you very much.
Thank you. The next question is from the line of Bhagesh from HDFC Mutual Fund. Please go ahead.
Hi, sir. I have a couple of queries over here. I understand the potential for the CNG business is quite large, and the CNG cascade business should do well because India again is going back to the decentralized approach that you have this complex biogas program, wherein instead of the pipeline, more of cascade usage will come in. Have you calculated the potential? What is the potential for the CNG cascade business for you over about 3-4 years when they roll out this 5,000 odd pumps and the centers also to make CBG? And who are the competitors over here?
Well, we have made a very detailed assessment of the potential that exists for the CNG pipeline by itself. Going by the fact that, when the CNG rollout was carried out by the government, the number of pumps which are available across retail units were barely about 1,500 only. And when the government have started, engaging themselves in the expansion, the Prime Minister on a couple of occasions have made a confirmation and a commitment that they would want the number of retail outlets on CNG to expand from 1,500 to 10,000 retail outlets in another 4 to 8 years. That was the kind of timeline they were talked about. If you look at the fact that, when we talk about these kind of expansions, obviously the number of units that are linked with this CNG ecosystem is fairly large. And one of the best ways to move the CNG gas is through the cylinders, etc. Traditionally, they've been using Type 1 or steel cylinders that has been in use. But with the new technological advancements that have come up, the Type 4 cylinders have proven time and again that they are much more economical and safer as well to use them in the place of steel cascades, etc. And the last 1 year operations, we've been able to prove this point many times over. If you look at the projections that we are making in terms of the CNG cascade by itself, in a span of about 8 years or so, even if I take barely a conversion rate of about 50% or so, we are estimating that the yearly business will be somewhere in the region of 700 to 800 crores.
In CNG cascade? 700 to 800 crores for the entire industry, cascade making industry, CNG cascade.
In addition to this, there are lots of other applications for which these cylinders also goes for. For example, these can be used for MRUs, as they call it, as mobile refilling unit. Not everybody can have an access to go to the retail outlets because some of the rural areas, etc., wherever you would want the CNG to be dispensed, what the government is planning to do is they will fill the CNG in a cascade, and then it will be serving as a mobile retail unit so that you can drive out to that unit, to the cascade unit, and then fill it up, and then after it gets emptied, the vehicle will move away and come back with a refill, etc. So that kind of additional business would also be there, which has also been projected to anywhere in the region of 150 to 200 crores. Government is also investing into biogas. That is also a form of CNG, in fact, compressed biogas, wherein some of the leading companies have also made commitments for investing into this system. And there again, looking at the potential, there the expected business is in the region of about 400 crores or so. So there are a couple of more. I have not even touched upon the fact that the use of the cylinders for automotive requirements, because at the end of the day, each vehicle, whether it is a bus, car, or a lorry, they would need a lot of these cylinders fitted to the vehicles, which I have not even touched upon to address this requirement. That by itself is going to be fairly large. But then, as I was mentioning it, we are extremely buoyant looking at the potential and the support that we have received from the industry. With the current order booking, it's a very clear confirmation as to which way the industry is supporting. In addition to this, the next question you asked me was with regard to the competition. Going by the government policy to make India Atmanirbhar Bharat, we have been able to successfully develop the technology here and roll out the manufacturing process. There are about 3 or 4 people, companies who are engaged in the casket business of type 3 and 4, which are the lighter weight options. But currently, they are all imported from different countries and assembled here in India, fulfilling the requirement of local Atmanirbhar Bharat. We are in that enviable position, I would say, as being the only supplier for sure.
Okay, one more question, sir. If you see your infrastructure part, you are doing something in the energy storage devices business. I'm assuming these are the storage facilities for the lithium-ion batteries for the ESS applications, right?
Yes.
Okay. Then why not extend this business to the automotive part also? Because there will be requirement for battery covers or for holding these things, because we are already dealing with several auto companies essentially. So is there a thought process to get into the actual EV business also? Because it's the same. Essentially, this is a static way of storing these things essentially.
We are working on the lithium battery side of the potential as well. As you know that we have a fully owned subsidiary under the name of Med Energy, who have been in the business for batteries, for lead-acid batteries, etc. There we have rolled out the development of lithium-ion batteries, which will be used for EVs, electric vehicles, and we've been focusing on the latest technology that is available in terms of the cell technology, and with the programming that is possible to have a thermal control also on these batteries that will be assembled there. We are in discussion with a couple of three-wheeler companies, etc., to carry out the initial trials where they are already in progress. So we are also addressing that opportunity for sure.
Mm-hmm. Thanks a lot, sir, and all the best from my side.
Yeah, thank you.
Thank you. The next question is from the line of Ganesh, an individual investor. Please go ahead.
Sir, can you hear me?
Yes, loud and clear, Ganesh.
Okay. So we have been talking about the EBITDA range for our value-added products, in the range of 18 to 22%. So what is stopping us from realizing that?
What is?
What is stopping us from realizing such an EBITDA range? Because I see the EBITDA for value-added products in the last year. We'll forget COVID for now. So it's been in the range of 17 to 18%. Fine, but our aspirational range seems to be 18 to 22%, right? So I just want to understand what is stopping us from realizing that aspirational range.
Yeah, in fact, you know that value-added product, what are the items covered in the value-added products? That is all composite products, Marks Freedom, then IBC. These 3 products are covered under this. I mean to say, the value-added products where the EBITDA margin in the range of 18 to 22%, the average is 20%. But certain times there may be the temporary price inflationary was there, so maybe 1 or 2% here or there. But certainly when we do the price booking and order booking, we consider that the EBITDA margin should be in the range of 18 to 20%. So average margin we have seen 14% EBITDA level, which we are also targeting. Considering established existing product will have a margin in the range of 11.5 to 14%, which includes all established product, where the packaging and some automotive related products, that all covered under the established products.
Got it.
We are sure definitely margin in the period is going to be improved further as the value-added percentage business is going to be increased.
Got it. Just one more question then. So in an earlier call, we understood that our LPG cylinder line capacity is 1.4 million cylinders per year. But because we manufacture cylinders of various sizes, the actual capacity is 1 million cylinders. Fine. With our current order book, the cylinder sizes must be uniform, right, with IOCL and other vendors. So with the same or similar line, will we be able to get the 1.4 million cylinders per year capacity because the sizes are uniform?
Yes, in fact, the current capacity that we have been invested almost about 5 to 6 years ago. And then actually that was the equipment that was running in Europe, which we acquired. Now, when we are looking at expansion, obviously lots of technologies have also changed in the meantime. The productivity has also gone up. There are faster machines that are available. Obviously, the kind of investments, if we have, even if we maintain, we will have definitely a better capacity for sure.
Okay. So will it be even more efficient when we consider multiple cylinder sizes, or it will?
Yes, of course.
When we have uniform cylinders.
There will be a certain amount of consolidation that has taken place in the last 4 or 5 years. We've been able to understand as to which sizes are running and which sizes have a lower volumes, etc. So we adapt the next line of expansion based upon the fact that we need to run more of this size and such a size and such a type of capacity. So obviously we will be in a position to have better output for sure.
Okay. Thank you. Thank you, sir. That's all my questions.
Welcome. Thank you.
Thank you. The next question is from the line of Mahendra Jain from Way to Wealth. Please go ahead.
Yeah, thank you. Namaste, Bharatji.
Namaskar.
Thanks for the opportunity.
Yeah.
Can you elaborate little bit like on disinvestment path, how we are going to achieve that, like by doing demerger of packaging business, international packaging business or something like that, or what kind of, or disinvestment like, or inviting some investor into that, if there is any clarity about it?
Since we will be able to give you more clarity, I can say in the next Concall, definitely more clarity will be there. Because the still matter is with the strategic or financial investor discussion is with the advisor part. And I will, in the period, we will definitely, market will update about the disinvestment process. Till I can say only one thing, matter is under discussion and will update you as the data will be available with me.
Okay. And what about this plate share, like,
yeah,
you know, planning to
yes, I had mentioned that place will be released shortly. That matter is already due diligence process by the potential buyer, which I have sent my communication. It is on. But I think regarding that, you will heard in the next short time, maybe 30 to 45 days, you will heard very slowly. My internal target is also keeping the debt free, means a place free by 30th September. That's the internal target. I am keeping it.
So second question is like a raw material prices fluctuation. So how we are like looking for future, like volatility and all these things. So how much we are comfortable right now in that situation?
So once, you are right. You know that because you are also aware in the market and you are also in the market that how the polymer prices or oil prices have treated in the last 6 months, including the foreign exchange also. But as we have seen in the last, I can say, 20 to 25 days, prices are coming on the reasonable level, I can say, which was in October, November, December 2021. So prices is coming normalizing because demand supply is also increasing. Initially in the month of, I can say, November to March, there are so many plants were under major shutdown in India and overseas. So now I think polymer prices, as you have, many research team are projecting oil prices in the range of maybe around $90 to $100, not maybe 120. Similarly, in polymer prices, we are also expecting a range, I can say, around $1,150 to $1,300, but not $1,600 or $1,500. reasonable price, whatever previous year average was there, that price should come back in the next 3 months' time.
Okay, sir. Okay, sir. That's all from my end. Thank you.
Thank you, Manoj.
Thank you. The next question is from the line of Hiten Boricha from Joindre Capital. Please go ahead.
Hello. Good evening, sir. So
Yeah.
I have only one question related to the CapEx. So you mentioned a current composite cylinder capacity is running at 90+ capacity utilization, right? So just wanted to understand what will be a capacity post the expansion of the composite cylinder? It's currently 1 million cylinder, right?
Yeah.
What will be?
I recall my communication earlier, which was sent to BSE and NSE, where I had mentioned that if we do the expansion, certainly for 500,000 cylinder, where we will need around 80 to 85 crores, but certainly that visibility currently it is not there. We will see after 3 months' time when the new business or new tender will come out by the government gas distribution company. But currently, as you heard in the previous person who has asked about the capacity, as we have a 1/4 million cylinder capacity, but currently utilization sellable we get 1 million cylinder for the different sizes. So I think that clear visibility about the LPG expansion we will have after the 3 to 4 months time only. Otherwise, small modification, automation, maintenance of the capex will be done, as which already covered under expansion capex plan of 170 crores.
Okay. So, referring to this PPT slide number 10, where you mentioned the company plans to add 1 million cylinder in next 12 months. So this is additional from current 1 million, right? So
Yes.
Next 12 months will be 2
18 months,
million
prior to 3 months, we had given that in next 12 to 18 months time, we will have a capex program for LPG cylinder for addition of 1 million, up to 1 million cylinder. But that is not yet taken in the ring. Yes, expansion plan is there, subject to how the capitalization, how the demand is coming.
Okay. So this is not yet confirmed, right?
No, not confirmed. Only,
Okay.
as I mentioned previous also, CNG expansion program, yes, because order booking itself is at 250 crores as on date. So definitely CNG expansion plan is already finalized, and that we are going ahead.
So what is the current capacity of CNG cylinders and what are the
capacity, as I mentioned to you, where we can do business of around the current capacity means what we have the CNG cylinder manufacturing, we can mention, we have mentioned the 250 casket in a year we can do that. In terms of the value, as mentioned to you, around 150 crores we can do. But as the order booking itself is 250 crores as on date, and to take the fresh order, we have already to execution the fresh order, we have identified capex plan, but that in any case equipment is going to be arrived in the next 8 to 10 months time. So full capacity utilization, as we are projecting, I tell you, current business 2022 we did business of around 250 crores for this we did. But this year, definitely, we are projecting more than 350 crores for composite products, including the CNG and LPG.
Okay. So we are expanding in CNG casket business, right?
Yeah, CNG we are expanding because more order book is there and more demand is coming up.
Okay. And what are we spending on this, sir?
In fact, we had identified equipments where we are going to do investment, but first that investment committed, that's the investment we are doing around 125 crores. We are doing it.
Okay, and this plant will be starting from next year.
400 crores from this investment.
Sorry, can you repeat it, sir?
So when we are investing 125 crores for the CNG capex, we'll be able to generate revenue of more than 400 crores.
Okay. And this capacity will be coming next year in FY23.
Next year, yes. Full utilization will come next year only.
Second half, right?
Next year it will come full. I think in Q1 we will be able to get it.
Okay, sir. Yeah. Thank you so much, sir. I will come back in the queue.
Yeah, thank you.
Thank you. The next question is from the line of Shashi Ranjan, an individual investor. Please go ahead.
Good afternoon. Thank you for the opportunity. Congratulations for the good order book, sir, that you have at present. The question that I have is that what measures are we taking to control the rising raw material prices and passing it on to our customers?
Yeah, so see, what happened, we are in such kind of the product, our products are mostly 92% products are B2B, end user we are giving, and everybody knows the polymer prices. And you can see the last, I can say 10, 15 years trend. Whenever price increase is there, we pass on to the customer. Price decrease also we pass on. Both the ways, the understanding is there. And most of the customer, I can tell you, around 50% customer, we do the business on monthly pricing. Every month we will pass on to them with the time lag, maybe because, but every month when the supplier change prices 4 times, but we change 1 time only. So we pass on with the gap of 15 to 20 days. But some customers, we do business on quarterly business, almost 40% business we are doing with the quarterly business with customers. There also we do the pricing transfer. So only 8% consumer product is there where we can play with the schemes. If prices are down, we increase the schemes, free schemes, and when the prices are up, we withdraw that scheme. So therefore, you have seen our EBITDA level also, except in Corona period where the EBITDA was 11%. Otherwise, our EBITDA range is in the range of 13 to 15.5% is our margin range for the EBITDA. So we are able to pass on, there is no doubt, because price, and another thing, we have seen the price increase in the last 4 months. Every price increase has been given because almost 70% is the raw material cost. So we can't sustain if we don't pass the increase to the customer.
That's great, sir. Just a clarification on that. Can you just divide the revenue on which we hike the prices on quarterly basis versus monthly basis?
As I mentioned to you, almost my 50% customer where do business on monthly basis. 50% of the customer. And 40% customer, maybe revenue-wise, we will do the bifurcation, but normally, such a way I can say that almost 70% business where we pass on benefit to immediately to the customer.
Thank you, sir. That answers my question. Thank you. Now, can I squeeze one more that's on competition part? How we are going to address the competition from companies like, say, Supreme Industries, who managed to grab order book of almost double of what they can produce? Then a company like Indorus Synergy, who has started supplying caskets to Adani Gas, Mahanagar Gas Limited, IRM Energy from Gujarat, and a few developers. They have also managed to grab the market. And sell their product. So how we are going to handle is there sufficient to have business for all the competitors we have right now? Thank you.
Especially it's desirable that we have some competition. It allows us to get some benchmarks, number one. Number two, as you would understand, the profile of the buyers in the composite segments are mostly the government-based organizations who rarely would be in a position to qualify any tender if there are not more than one bidder. So though we are the companies who have manufacturing capabilities locally, but at the same time it is necessary for other options who would be probably, part of the bidding process by itself. So if companies like you mentioned are able to import the cylinders and assemble them, they would also be in a position to help the process of tendering. Of course, they will be at a gross disadvantages. And there are a couple of policies the government has rolled out which makes the local bidder to be much, much more favorable as well. There are companies in the LPG segments. We have, I will put it, it's more like a race where we are far, far ahead in terms of the competition, in terms of our reach, in terms of our segmentation, in terms of our product range. We are there probably globally. We have the largest product range that we have in terms of the sizes also. So any requirement that comes up, even on the LPG segment, we are in a position to do that. We are constantly innovating and improving our technologies and the product scales, etc. So if there are competition, they are always welcome. There are nothing to really get worried. In fact, we welcome them so that we are able to allow the customer to have the confidence that here is a business where he doesn't have to really depend on one single source, and that also sometimes can be a little hindrance as well. but then we continue to, delight the customers as we normally would like to put it, very humbly, and the customers are taken taken care well of, no problems at all.
That's great, sir. But just to understand that competition part a bit better, for instance, I'll quote of Supreme Industries, who won bidding from IOCL, and the price they quoted was 2,312 rupees per LPG cylinder for more than 7.25 lakh cylinders of 10 kg category. Although when they won this order, their production capacity was only 5 lakh units. And are we lagging somewhere because a company with a production capacity of 5 lakh is managed to grab a piece of order which is more than 7.25 lakh? And how did we fail against Supreme Industry over there? As the price being quoted by Supreme Industry, which I calculated roughly, was 2,312. So did we participate in that IOCL tender, and was Supreme Industry well ahead of us when it comes to grabbing the order? Thank you.
Well, the answer lies in the question that you've asked. When you don't have the capacity and you bid for a higher capacity, obviously you know as to what the result would be, right? And I don't want to say more than that. But with us, we are very realistic in terms of how we are able to treat our order booking. We already have a good percentage of my businesses being catered to my customers who are placed overseas, and giving preference to the local requirement that comes up. With the IOCL requirement that has also come up, we are now fully booked in terms of the capacity, or I would put it 90% share of the business is there. So I would not say if party B was not there, whether I would have got those additional orders. When I don't have the capacity, that's the situation. So if more and more customers do get composite cylinders this year, then the next year we'll probably have multiple number of customers, doubling that. So it always helps in the growth of the market. It is never desirable to have just one player operating in this segment, or for that matter, any segment.
How Abhi Investment Holding PTE is going to help us? Can you shed some light on this, the recently floated subsidiary?
Yeah. Means you are talking about the recent one subsidiary company was formed in the Singapore. You are talking about that, no?
Yes, sir.
Yeah, because you know that my holding company presently is a Dinex, where he is holding the Taiwan, Malaysia, Indonesia, Taiwan, all companies are under that one roof. So when we are doing the restructuring business, some kind of the area-wise restructuring ongoing. Therefore, this company has been formed so that my strategic investor, whenever will come, will put the money in that company, then we'll transfer some holding, then we will also own some percentage of holding. So that is one kind of the step towards the I can say consolidation of this overseas operation, which we are already talking. Right? Hello?
As the current participant has left the queue, we'll move on to the next question, which is from the line of Harsh Beria, an individual investor. Please go ahead.
Yeah, Harish.
Mr. Beria, I would request you to use your handset to ask a question.
Is this better now?
Yeah.
Okay, perfect. I have a question about your CNG cascade business. You had mentioned that you are putting up a new line, which will come on stream in 6 to 8 months. What is the cost to put up a new line in this division?
Yeah, I think you have missed out that. I had mentioned that we are going to invest around 130 crores for this line. This is a fully automatic line. And where we can
so it's around
400 crores, right?
Perfect. That helps. Sorry, I missed it out. My another question was on your business development plan for CNG on board vehicles. Is there any update in terms of OEM authorization regarding this?
Yes. Right now, with the capacity being utilized for the specific type of demand that has already generated, we have been working with for the development of the auto OEMs as well, for the auto cylinders as well. That's also a very large segment of demand. The new expansion that is being planned takes care of some of those requirements, where little different manufacturing capabilities are also required. So all of these things are being lined up. So when we roll out the next phase of expansion in the coming year or so, we will be in a position to have that thrust as well.
Okay. And do we have a priority? Like, will we target more towards commercial vehicle OEMs or passenger car OEMs, or are we trying to do business development across the sector?
Yes, of course, not to forget the fact that the passenger vehicles would be the cream of the lot. There will be a large demand, and they will have the better paying capabilities as well. So that is also the range of focus. Commercial vehicles will also be there to take care of the fact that they will take advantage of the lower cost of fuel expenses when it comes to CNG. The government is putting a lot of thrust in terms of being able to use cleaner fuel as well. There are many such applications where it will come in through, and we are very, very confident going by the fact that some of these applications have already found acceptance in overseas. We are also able to confidently foresee that we will have a similar and better experience as well.
Perfect. That provides a lot of context. Thanks for clarifying that. My last question was, is it possible for you guys to share like the gross margin breakup for CNG cascades and LPG cylinders? Like, what are the gross margins which you are making on these products?
Well, I wouldn't want to give you a breakup on that because they are pretty confidential in nature. As people in the earlier calls have also confirmed, there are enough years available to take care of some of these additional information. But then when we meet one-on-one, we will be in a position to share this offline. That's not a problem.
Perfect. Thanks for the clarification and wish you the best for your expansion. I hope you guys do well in the coming few years. Thanks for the opportunity.
Yes. Thank you very much, Harsh.
Thank you very much.
Thank you. As that was the last question for today.
Madam, yeah.
Yes, sir. Please proceed.
Yeah, this is the last question because we have another conference call is here.
Sure, sir. I'm announcing now. As that was the last question for today, I would now like to hand the conference over to the management for closing comments.
Yeah, thank you very much to all my audience, and we definitely good period is ahead, and whatever time we have taken, and definitely the right time has come now as the pre-COVID level is over, and definitely as we have promised and we have given the guidance for more than 15% growth in the period ahead, and the same thing will improve in the performance and the net working capital margins also. Thank you very much to all my valued investors.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.